Hey folks, welcome to another SPY options update, and this is for the week from August 7th to 11th. It was a pretty decent week. I earned $486. As usual, we'll take a look at each day and then I will break down my Friday's trades in more detail. So on Monday, August the 7th, it was pretty straightforward. You can see there is a clear channel here that's been going upwards. And it's always simpler to trade this way because you just follow the trend. And I was able to make $137. On Tuesday, this kind of looks like a Nike swoosh symbol. It started the day going down, but by the end of the day, it finished higher. I was hesitant to trade pretty much all of Tuesday because in the morning, it didn't make a lot of sense. Like the price of the SPY kept going down, it looks like. But when you look at the RSI, it kept moving up higher, right? So you have the RSI going higher, but you have the stock going lower. And then you have the MACD going low first, but then it's switched over here and started going higher before the stock price did. So I was waiting later on in the afternoon to see if it would go high enough to break the previous high of the day, which was in the very early morning. And it looked like it did that at around 3 p.m. or 2:55 is when it officially broke through the highs of the day and reached a new daily high. So when that happened, I looked at the MACD and it is above the zero line and it's pointing upwards, the blue line and the orange signal line. And then for the RSI, as long as it's above 50, it's pretty bullish. So I decided to, at around 3 o'clock here, put in a couple of short puts. You can see my 448 put. I sold two for $37 each. This was a pretty simple trade. The strike price of 448 would be right around here. So it was an at the money short put, with the idea being that SPY would finish above 448 for the day, because at that time it looked like things were heading higher. But again, I want to emphasize I only made this trade because SPY breached above the high of the day that was set previously at the start of the day. Because two things could have happened here. It could have either gone up, reached the 448 level and got rejected and went down. In that case, it would be pretty bearish. Or it could do what it actually did in this case, which was go above the previous high of 448, and then that would be a bullish signal. So that's why I decided to put in a bull trade here. And it was already near the end of the day. There was only an hour left of trading when I put in this trade. So I put this in at 12 o'clock basically, and the market closes at 1 Pacific. So I was only able to get this one trade in for Tuesday, but a win is a win. And after the $2 in commission, I came out with $72 of profit on Tuesday. On Wednesday, I have several trades here that ended up being a $99 profit. And that would be this day over here, a lot of ups and downs. It's harder to trade these kinds of days, but you really have to pay attention to the momentum signals like the MACD and the RSI, because usually these start to turn before the actual price of the SPY. Thursday was when CPI came out. This threw me in for a loop a little bit, especially near the end of the day. But just in case for those who aren't aware, usually on CPI days, there's a lot of volatility in the markets, and the initial movement is usually a fake out, and the market tends to move in the opposite direction for the remaining of the day. So in this case, I think CPI was pretty much in line with expectations. The market started by going higher, and that would be the signal that it's most likely the market's going to sell off at some point during the rest of the day, and we're probably going to end the day lower. So the turnaround was right here. That's when the MACD crossed over and started going negative. The RSI also breached below the 50 line here. And at this point, it was a good idea to go short. And as you can see, for the rest of the day, the market just continued going down, except this last part over here. There was a bounce at about 2 p.m. And I thought the market was, based on how it was going to continue going higher. But near the end of the day, this last 30 minutes, it kind of went down and then up. So I wasn't expecting that. I had some short puts that I had to get out of and take a loss. So unfortunately, I took a $3 loss, and most of that is just because I had a $23 gain, but a $26 commission for just trading too much, I guess. Here you can see my strangles didn't really work very well. I bought two strangles and paid $114, but then I noticed they weren't going to work, so I sold them for $80 and took a loss of $34 each, and there were two of them, plus about $9 for trading fees. So losing a little bit of money on Thursday, pretty much break even. And then on Friday, which is today, the market's been closed now for several hours. I'm going to go over the trades I put in today. As you can see, they're mostly bearish. That's why these bubbles are in red. Red means bearish, green means bullish, but I didn't put in any bull trades today, except the long straddle, which is sort of a neutral position, but I'll explain what that is as we get into it. Okay, starting out at around 1140, the MACD was below the zero line, RSI below 50, and because of the way the price was bouncing off the green EMA and heading lower, I thought the market was going to go lower, so that's why I put in a bear call over here at 446, and all that is just selling a call option with the strike price of 446, which is right here. So that's an out of the money short call option. So even if the market were to go up, I would still have some leeway and it wouldn't go in the money right away. So opening up my IB desktop client here, you can see that was this trade made right here. 446 call I sold, which means I'm short one option, and I made $45 as the credit. So then the market decided to go up. So as you can see, my 446 bear call wasn't really put in at the right time because I could have made more money by selling the call option up here where it was closer to the 446 strike. But in any case, since the market didn't continue to go up, my option was not in the money, so I held on to it. I did not buy it back and close my position and just waited to see what the market was going to do. And around 1:30 p.m. here on the chart, I noticed that the market is sort of in this triangle pattern. And a symmetrical triangle is just pretty much what it sounds like. It's a triangle that is not going up or down, but the fluctuations are getting smaller and smaller. And usually when this happens, before it gets to the point where the triangles where the two lines touch, it usually breaks out in one direction or another, and there tends to be a pretty big move when that happens. Now, that didn't happen today. I was expecting a move of about this big. So if it broke out through the top, I was expecting it to go to 448. And if it broke out to the bottom, then it could go to like around 441 or 442. Obviously, that didn't happen. It was a smaller breakout. But if you look up triangle patterns, you'll most likely see other examples that look something like this, where you have this fluctuation up and down where the range gets more narrow and more tight until it breaks out. And typically, because of the tension that the triangle was withholding, the breakout tends to be pretty large. Again, not the case this time, but because I thought it was going to break out in one direction or another in a big way, I put in a straddle. And all a straddle is purchasing a call option and the put option of the same strike simultaneously. So here you can see I bought the 445 call option. I bought 4 of them, and I also bought 4 of the put option of the same strike, 445. And so the profit profile looks something like this. The letter A here is the strike price. In this case, it would be 445 for the SPY. And I basically make a lot of money if SPY goes down a lot, like in this direction, or if SPY goes up a lot in this direction. But I would lose money if SPY kind of just hangs around between this point and this point. This horizontal line being the price of the underlying when the option expires, which is at the end of the day. So I wanted SPY to move up or down a lot, and because of the nature of the symmetrical triangle, you don't know which way it's going to move. So that's why it's a straddle. So this was an at the money long straddle. And this particular strategy, the straddle, actually, I didn't make money. I lost money because the movement up was not as big as I hoped it would be. So here you can see I bought my call options and I bought my put options, and then I eventually sold them. The call options, I did make some money. You can see I sold the call options for more than I paid. I sold them for 97 and 129, but I bought them for 79. So I was able to make a profit there, but I lost more money through my put option side. So overall, I think I lost about $100 through, including commission, through this long straddle strategy, which didn't work out. So I sold out of my long straddles around here where I noticed that it wouldn't go up. Because if you remember from what I was saying on Tuesday, the high for the day is around here at 446.7. This was the highest that SPY went for today. And if SPY had continued to go up after it broke out of this triangle and went past 446.7, then I would be extremely bullish because it would be a new high for the day, and usually that's going to lead to a higher close for the day. But because the breakout was weak, and you can see here there's pretty much a double top over here, basically came up, went down, came up again to about the same level, went down, and that's pretty bearish. It means it's most likely going to continue going down. So after this red bar over here and another red bar, this was around 3 o'clock. So an hour left of trading in a day. I sold some more bear call spreads, and that would be these ones over here. So at 12:03, and then half an hour later, I sold some more bear calls because it looked like it was going to continue going down. Half an hour would be like around here, 3:30. Yeah, so it came up again, and as you can see, this red candle came up shorter than the previous two double tops over here. And when there was a massive red candle drop like this, and it closed below the 9 EMA, this green line, it was pretty much game over for the bulls, and most likely the stock is going to continue dropping for the rest of the day. So that's why over here at around 350, like 10 minutes before closing, I actually went and bought some puts, 0-day puts with the 446 strike, and that would be these ones over here. So I bought 446 puts at 12:52, so just 7 minutes before the market closed, which is very aggressive. I bought these puts, and my thought was that SPY was going to continue falling because there was just way too many bearish sentiments. Double top over here, and then we had another couple of attempts here which failed. It was most likely going to continue heading lower. And at the time that I put this trade in, buying these puts, the RSI was below the 50 and the MACD was also heading downwards. So because I was long these puts and the market went lower, I was able to capitalize on that and sold these puts later because I don't want to hold these until next week. So that's why I closed out of my positions, and I sold them for a profit here. So you can see 80 and 87. So I was able to make a profit with these puts here. And that's pretty much it for today's trades. I'm not holding any SPY options going into next week. You can see these are my bear spread positions that I put in today. Their market price is now worth 0, so these will expire out of the money. In terms of individual options, I just have that one 446 call that I put in the morning. That was this first one here, 446 bear call, and that is expiring out of the money because 446 is where this purple line is, and the market closed below 446. So this is going to also expire out of the money and be removed from my portfolio by the end of today. And with all of those trades in, I made a final credit of $181 for Friday after fees. So if we take a total tally of this week's earnings, that's 486, which is a 1.6% return. The SPY for this week pretty much just flat, down just 0.26%. And this is what the chart looks like. I'm a bit higher than where I was last week. SPY is pretty much going flat. So that's it for this week. Thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.